Hey, what's going on, guys? Hope everything is going well. Wanted to do another quick video. All right, wanted to look at the markets this past week. Kind of choppy, some up days, some down days, quite volatile. Even though the volatility wasn't as high as it was earlier this year and as high as September of last year. But if you really want to look at what no one's really talking about. Everyone's talking about, hey, oil had a good day and oil could potentially rally even higher than where it is right now. But the NASDAQ stocks didn't do so well. I mean, yes, every day you're not going to see up days, or if you're in a bear market, down days every day. But what I noticed was these FANG stocks, right? Seems that they've lost their luster in the short term from a trading perspective. You look at FANG stocks like Facebook, Apple, Netflix, Google, all these traders talking about that, investors. Facebook had a bad day, down $3. Have put options as a disclosure. And then you look at Google. Google was down $3, or I think it's a buck actually. And then Netflix was down as well. So they didn't perform while oil performed yesterday. And I went over to the futures COT reports. Commercial money, like the big players in the markets, they are net short the NASDAQ. So just as FYI, commercial money tends to be right, not always. And in addition to that, they are usually early than most. So when I see that, I'm thinking, okay, guess what? The commercial money may be right again, and we're going into the month of May in a few weeks. So if you look at that, I won't be surprised the market rolls over. It may not be as big as a correction as August of last year, September, but I expect a pullback for sure. Or I do expect a pullback. Let me rephrase that. Now, in other news, the Federal Reserve is going to be meeting on Monday, emergency meeting. Last time this occurred was in November of 2015, right before the Federal Reserve raised rates. And what's quite interesting is that the Federal Reserve, or once they raised rates, the price of gold has gone up since that moment. And what this tells us is that when you have higher rates, right, that is inflationary. And as long as actually the interest rates are below the market rate, then yes, you will get inflation for sure. You will also get the velocity of money picking up. And the more aggressive the Federal Reserve is in raising interest rates, the more inflation that will ensue. Unless you are in a deflationary environment, then that is off the table about inflation. And if you want to go back to 2007, they started to decrease rates. And once they decreased rates, what did that lead to? That led to the financial crisis. And you saw that it led to a deflationary spiral in the short term. And what's interesting, they're raising rates now. So in the future, yes, you're going to get inflation. Now, secondly, I've noticed that a lot of traders have changed their tune in terms of the US dollar index. They were very bearish last year, and now, I mean, they were very bullish last year. Now they're very bearish. They're thinking that it's going to go lower, but not significantly lower. And like I've mentioned before, dollar index consists of three major currencies. It consists of the euro, yen, and pound. And we did see the yen appreciate against the dollar, but that didn't have that much of an effect on the dollar index because it's the euro. That is the main currency in charge of the dollar index, in my opinion. And ultimately, what's going to end up happening in Europe is if they continue to have negative interest rates, that's going to hurt their banking system. And if it hurts their banking system, like banks like Credit Suisse, Deutsche Bank has been hammered hard if you look at the stock price. It's gone down over 30%, and not way more than 30%, you could say, from a few years ago. And actually is, what is it, maybe 60%. I remember seeing charts of like $52. Right now it's trading at $16, and I'm net short as a disclosure Deutsche Bank. And if you see those banks go hit all-time lows or yearly lows, there's going to be rumblings about what the hell is wrong with the stock, what the hell is wrong with these banks in Europe. And in my opinion, even though you see higher rates in the United States, higher Fed funds rate, which makes you have inflation in the economy, and also short term it makes the dollar go down. Well, even if we have the Federal Reserve raising rates right now, and if you do see Europe slowing down, adding that point in that I said about the dollar, you could actually see the dollar rally if you start to see Deutsche Bank, Credit Suisse face more pressure, and there's talks and rumblings of a banking crisis in Europe. If Deutsche Bank and Credit Suisse are not fixed, then I will assume that the dollar index will go up. And in addition to that, Europe has a sovereign debt bubble that they are in. And the other reason why I still think, even though we're raising rates, which should be inflationary because the rates are below the market rate, you have to also look at China. If China is going to slow down, or if China is slowing down, let me rephrase, then what's going to end up happening to the worldwide economy? It's going to slow down. Some people may say it's not going to be this year. Okay, if it's not this year, next year. Then what's going to go on with China? What it's going to do to the whole world? It's going to make it slow down. You make it slow down, then guess what? Everyone gets affected. Europe, the United States, etc. And thus, what I feel is going to happen from a short-term currency trade, if you were to look at it, I would say that the Japanese yen to dollar, that would be bullish in my opinion, where you see the rally in the Japanese yen right now, that will continue in the near-term future, even though I still think that Japan has issues as well. That's something to note. And if you look at the euro, if you have problems with these mega banks there, even though a lot of traders right now are bullish on the euro, I think that will reverse back into bearish mode for the euro, which would push upward pressure on the US dollar. And then the British pound, if Britain leaves the Eurozone, the euro, in my opinion, is going to get pounded as well. And the British pound as well is going to get pounded. No pun intended. So put all this together, I still feel over the next year or two, dollar index will go higher. Short term, you may see a little more pressure on the dollar index from a trading perspective. And next month, few months ahead, because of this Brexit issue, I feel that the dollar may rally because of that issue. And if Britain doesn't leave, what if I'm wrong? Britain doesn't leave, then the British pound would rally, the euro would rally. But ultimately, still see issues with these banks in Europe. I still see issues that's going on in China. And then if those things blow up in our faces, then what's next? Who's going to be next? Is it going to be Japan? I mean, their debt to GDP ratio is out of control. Their 10-year note is trading at 8 basis points, and people are bullish, I see, on the Japanese bonds. I mean, could it go higher? Yeah. I'm just saying that I wouldn't bet the farm on it, especially in those levered markets. And a disclosure, I do have positions with a broker, part of my portfolio, against the Japanese bond market, but we're using options. So just want to point out, once again, just having discussion. If you're going to make any trading or investing advice, if you're going to make any trading decisions, So remember, do your due diligence, homework, do your research, and good luck to all. Anyways, I'll talk to you later, guys. Have a nice day.